Hello, very good morning to all. Kelvin here again. Welcome to today's Daily Dose. Very good morning. Today is Tuesday, 11th of June 2024. So before we start our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, no financial advice or recommendation for any investment product. Any forecast or prediction or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so all good. Okay, so before we jump straight into today's short-term intraday technical outlook, let's have a recap of what has taken shape yesterday in terms of the cross-asset performance and as well as its related news flow or economic data releases. So yesterday there's no key economic data releases during the European and the US session, but however there's this news flow that is rather important from a medium-term perspective and to a long-term perspective impacting the Eurozone. So what I'm going to share with you is yesterday the French President Macron, he actually called on a snap French election. Okay, so this French election is different from the presidential election. That means it's a French parliament election in a bid to actually get a strong mandate before Macron's presidential election bid again, I think 2 years down the road. So the reason why the French president called for a snap election for the French parliament is actually due to over the weekend, there's this European wide European Parliament election that saw the far right party gaining a foothold against the more central left and centralist party. So that actually impacted the confidence of the Eurozone business sentiment. So it's kind of a rather weak on a shorter term basis because its power starts to fall on to the far right party, especially in French, because in France, pardon me, because France is the I would say that the second biggest powerhouse in Eurozone after or on par with Germany. So if Le Pen, which is the leader of the far right coalition or far right parliamentary party in France gain a foothold in the French France parliament election, not president, parliament election. That means, i.e., it will be actually business friendly reforms will be harder to pass, and it will start to skew towards more on socialist and protectionism. All right, so that could also derail we call it the euro currency. So yesterday we saw after the release of this news, the euro dollar fell. But what's interesting over here is that the euro dollar tested our short-term intraday support, do a bit of whipsaw at the 1.0725 level, printed a 1-month low of 1.0720 before rebounding up above 1.076 during the US session. So interestingly, from a technical perspective, there seems to be some form of we call it oversold condition that lure in short-term speculators to actually build up the euro dollar right at around the short-term pivotal support level. And despite the fact that the euro dollar fell, it didn't actually significantly have a spillover impact on the other major dollar pair. So what we could see over here is that the sterling dollar, as usual, managed to held at the 1.27 figure level, which we highlighted in our short-term intraday technical outlook yesterday, and shaped a short-term intraday bounce as well. So later I'll touch on more about the technical chart of the dollar major currency. Then you guys were able to see a better, clearer picture what I'm talking about in terms of the intraday performance, and most importantly, how this news flow react at the key levels. All right, so once it react at the key levels, we got to respect the key levels. That is more important because the key levels are levels that are being traded by the market participants. All right. So now another important news flow over here is that oil prices managed to burst up yesterday on this potentially positive news flow coming out more from not from the Middle East but from the US, because given that oil prices has tumbled lately in the last week or so towards a kind of a 3-month low. What we see over here is on Monday, oil prices, the WTI crude oil rallied up to I think 3.5% positive. Is actually due to the fact that given that oil prices last week is hovering at around the 3-month low, which is at the $71-72 per barrel. So that actually kind of speculate that there will be a demand or will be a magnetic pull for the US EIA, the USA agency, to actually purchase crude purchases to actually replenish its petroleum reserve. Okay, so this is that particular so-called alleged rumored news flow that the US EIA, the energy authority, maybe in the oil market, given that the oil price is relatively cheaper right now compared to 3 months ago, to actually use this opportunity to stockpile its petroleum reserve. So that actually kind of ignited a spike up in the oil price. And still recall that oil prices today we highlighted there's a key pivotal resistance over here at 76.40. So that level called pierce up, which is indeed a pivotal resistance. So what I mean by pivotal is anything that is pivotal, either a pivotal support or pivotal resistance, one is being taken out, you will see a very strong reaction. So what we could see over here is that very quickly, but let me share with you what do I mean by pivotal. So yesterday we do highlight that this was a pivotal resistance here at 76.70. So after the break of this 76.70 level or 76.70 or so, we start to see this. So this was the former support broken down, kickstart a decline in WTI crude oil. Then yesterday you see a spike up. So after this spike up, it led to a very strong rally in the next hour or so. All right, you could see here. So this is what I mean by pivotal. So once a level is pivotal, any reaction against it, because this was a pivotal resistance yesterday, it will lead to a indirect significant movement. That means, i.e., pivotal resistance broken. That means the indirect significant movement will be a potential significant spike up on the intraday, because I define it on the intraday time frame, which is the hourly chart. So this is what I mean by pivotal. So later I'll share with you more on the short-term technical outlook. What is it doing right now? Okay, once we cover on the intraday outlook on WTI crude. Okay, so this is more of a news flow perspective. Okay, so this is the two key news flow and the event that impact the market. And what's interesting over here is that we did highlight in the US stock market yesterday is that momentum factor is still positive on the US market by looking at the S&P 500 momentum ETF that is still leading the pack by printing a fresh all-time high by on its relative chart against the S&P 500, which I did highlighted yesterday. So what you could see over here is that indeed the S&P 500, the Dow Jones Industrial Average, and the Nasdaq 100 managed to inch higher yesterday and totally erase off the losses that has been seen on last Friday, induced by the spike up in that 10-year US Treasury yield after the US market participants or the global market participant got too frizzy about that headline non-farm payroll data, that big expectation. But in fact, to me, it's more like a mixed labor market data. Why? Because of the unemployment rate actually also spike up to 4%, and this spike up of 4% is not since November 2022. All right, so what we could see over here right now at this point in time, this is the trading view chart on the intraday movement chart on the S&P 500. So I could see is that at the start of the US session, it keep on continue up and it closed near the session high. And it's right now it's coming very close to print another fresh all-time intraday high. Similarly for the Nasdaq 100 as well. So what we could see over here, the Nasdaq 100, okay, it's hang. Okay, 1 second now, I think it's not. Yep, the Nasdaq 100. The Dow Jones Industrial Average, even though the Dow Jones Industrial Average is not close to the current all-time high yet, still got a fair bit more to go as compared to the Nasdaq 100 or the S&P 500 is very close. It's less than, I think, 0.5%. Later I'll share you the daily chart. So this is the Dow Jones Industrial Average. Also, more of a volatile session, but it managed to actually close near the session high as well. All right, so overall, what we could see is across the board, very strong performance in the four major US indices. The S&P 500 plus 0.26%. The top performer is Nasdaq 100, led by, as usual, the AI heavy mega cap stocks, Nvidia. Dow Jones 0.18% because it did not have that particular heavy weighted Nvidia's AI supremacy stocks inside is 30 component stocks within the Dow Jones Industrial Average, and not too bad on the Russell 2000 as well. Also managed to inch out a gain of 0.25%. So what we could see over here is that overall very positive movement on the S&P 500 in terms of the heat map as well. Okay, if you look at the heat map over here, okay, so what we could see over here is almost more of them are in the green. So what we could see over here is the financials actually underperformed yesterday, and within the mega cap stocks, the 7 of them, Apple seems to be now getting very not in favor, despite the fact that yesterday they do have one of these product launches, and the Apple senior management actually made an announcement that the next Apple model phone, that means the next latest model phone of Apple, will incorporated some AI capabilities with OpenAI ChatGPT capabilities into Serial as well. So, but that doesn't really gel well to the market participants, so we've got to respect it. So down negative 1.92%, very similar the fate of Tesla as well, down negative 2%. So all in all, right, among the 7 mega cap stocks, the 7 mega cap stocks, the weakest is Tesla, now followed by Apple. But as long as Nvidia is leading the fort together, spreading over to Microsoft, Google, and Meta, and Amazon, we will start to see still a very firm short to medium term uptrend on the S&P 500 and the Nasdaq 100, given that this mega cap stock has a significant weightage on the Nasdaq 100, and in some form or another, it shouldn't also derail the short to medium term uptrend of the Dow Jones as well. All right, if despite the fact that the Dow Jones is much lagging. All right, so now with that, that should actually sum up the news flow perspective on the performance of the cross asset classes yesterday, the key performance. So now let us touch more about the intermarket fundamentals correlationship. Okay, starting with the US 10-year Treasury yield and the US dollar ahead of tomorrow key risk event, which is the US CPI data and the US Federal Reserve FOMC meeting. So these two data, I'll talk more about it in tomorrow's daily dose of market insights because that will be much more relevant instead. So right now, let's look at the US 10-year Treasury yield. So I did mention that the US 10-year Treasury yield has a key resistance to watch would be at the 4.5% level. So what we could see over here is that the boost of the US 10-year Treasury yield starts to hesitant at this 4.5% resistance level. We also confluence with the 50-day moving average. So if it starts to tick down much closer today again as well, ahead of that key risk event on Wednesday, which is the US CPI data and the US FOMC meeting. Potentially, that means, i.e., from a short-term technical analysis to a medium technical analysis perspective, it seems to me that the US 10-year Treasury remains trapped between the 4.5% level and 4.3% level. Okay, these two range over here. That means going forward in the short-term basis, there might be no clear trend yet, unless we start to see a clearer picture going forward into after the exposed key risk event that will take shape on Wednesday. So if this thing will start to play out, that means from today until the exposed event on Wednesday tomorrow, the US dollar will be potentially trading in a similar sideways fashion as well. So if you look at the US dollar index over here, so what we could see is that it starts to actually hover. Okay, 1 minute now, I think it's a bit slow. It starts to hover also at the right at the 50 50-day moving average acting as a near-term resistance at the 105.20 level. So if it starts to, so what you could see yesterday is, let me open up this chart. Okay, it's very slow. I don't know why. Okay, this is the dollar index. So it seems to be trading this kind of shooting star formation, a bearish shooting star, right after a test at the 105.20 level before backing back down in the later part of yesterday's session. So overall, if today we start to see a formation of another bearish candlestick, that means i.e. a black candle, that means that is indicating to us the bulls are pretty much hesitant to push the US dollar further based on this technical element that I'm sharing with you all. This daily bearish shooting star candlestick right at the 105.20 resistance level, and the 50-day moving average also acting as a resistance. So potentially it may start to see, taking the cue from that US 10-year Treasury yield, starts to trade within this sideways range between 105.2 and the lower limit of the range, which is at this 103, 104 level. Okay, okay, around 104. Yeah, 104 level. Okay, ahead of that key risk event on Wednesday, which is tomorrow, which is the CPI data release and the outcome of the Federal Reserve FOMC meeting. Okay, so that's actually explained to us that why the dollar also managed to give back some strength yesterday against the euro, despite that the euro dollar was the weakest currency yesterday against the dollar. So if you look at the dollar 5-day performance, okay, so this is the dollar 5-day performance as of today over here. So we could see over here is that the euro dollar previously was the euro dollar was the weakest against, okay, so this is the dollar against euro. So the dollar is the strongest against the euro yesterday. So right now, after that US 10-year Treasury yield failed to break above that key resistance level that I highlighted to you all, it now starts to temper off during the Asia session as well. So more or less trading sideways against the dollar. Okay, so right now what's interesting over here is that the push up, the outlier was the dollar yen. So at this point in time, I'll try to search any news flow. There is no related news flow that is coming up from the dollar yen. So even though if you look at the situation right now, that even though the dollar yen push up, but it's not related to any news flow or event, even on the intermarket correlation by looking at the 10-year JGB yield, the 2-year and the 30-year JGB yield, it doesn't have any significant movement as well. So let me very quickly open up the chart of the JGB yield for you all to take a look at it. Okay, so if you look at the 10-year JGB yield, it continues to remain resilient above the 1% level. Okay, so this is right now while we are trading. Okay, it still remains above that 1% level at 1.02 now. Okay, my apologies, but the things a bit lagging right now. So very similar for the 2-year as well. The 2-year JGB yield still pretty much resilient on the upside, and followed by, okay, this is the 30-year, pardon me, not the 2-year, this is the 30-year. Okay, and if you look at the 2-year JGB yield, okay, it continues to remain on the firm uptrend as well, all right, at 0.36%. So overall, if you look at the spread between the JGB yield and the US Treasury yield, taking from the longer term one, the 10-year US Treasury yield minus off the 10-year JGB yield, it's still trading in a series of lower high as well, inching downwards, as you can see over here, since the bearish breakdown of this ascending channel on the 13th of May. Notice this is a series of lower high, lower high, lower high. So indicating to us that the yield spread premium between the US 10-year Treasury yield against the 10-year JGB yield has starts to narrow as well. So by right, if you look at such intermarket fundamentals, it shouldn't support today's spike up in the dollar yen without any news flow, because there's no news flow that causes it to spike up. And the spread between the 2-year Treasury yield, the shorter term, versus the 2-year JGB yield also showing similar movement as well, lower high after the bearish breakdown on the 7th of May from this ascending channel. Okay, so that also indicate to us that the 2-year US Treasury yield premium is also getting narrower versus the 2-year JGB yield. All right, so later we touch on more of the short-term technical intraday outlook on the dollar yen. So at this moment in time, I couldn't find any reason what is causing the dollar yen to actually rally against other dollar currency, dollar pair, which is kind of start to go sideways in line with that US 10-year treasury bill that's being kept by the 50-day moving average, which I highlighted earlier at the 4.5% level. All right, so this is the key intermarket relation on the FX market I share with you all. So with that, now let us straight away jump straight to the short-term technical outlook, starting from the FX market first. So with the FX market, let us kickstart with the euro dollar. So over the euro dollar, what we could see over here is that yesterday it did a bit of challenge at the 0.750 short-term pivotal support before bouncing up. And the way it bounced up over here, if you look at the daily chart, okay, it's not a bullish hammer. Okay, it's not a bullish hammer because the body of the candle is not small enough. It just show a spike down before bouncing up, and where it's spiked down, right, the spike down where it stopped, right, if you do the Fibo retracement of this multi-week uptrend, the last multi-week uptrend from 17th of April all the way up to its high of 4th of June. So we could see it actually paused at near the golden ratio at 0.730, which is slightly below that 0.750 short-term pivotal support level. And also that spike down managed to have a close above this dotted line here, which is the former medium-term descending channel resistance, now turned into a pullback support. All right, this dotted line here. So with that situation over here, we could actually look at it as a whipsaw around at the 0.750 level, given its positive element that I share with you on the daily time frame. So I will have a little bit of excess at the 0.730 today. So the short-term pivotal support, I will slash it 1.0750 slash 1.0730. So still potentially looking out for at least a minor bounce to retrace last Friday's steep sell-off. All right, at least a minor bounce in the first step from a intraday technical analysis perspective. So as long as 0.750 slash 1.0730 short-term pivotal support holds, we will still maintain that short-term intraday bias for that potential minor bounce scenario. First resistance in the near term to watch will be at 1.0790, which correspond to the minor swing low of 30th of May and the 200-day moving average. A breakup above this level exposes the next near-term support at 1.0835, which is corresponding very close to the 20-day moving average, coming to act as a resistance as well. And if you do the Fibo retracement of last Friday's hard sell-off all the way down to yesterday's low, it closed to the golden ratio of not golden. Okay, this should be the reverse. Okay, let me delete it. I don't know why it's so slow today. Okay. Okay, 1 second. Okay, this is the golden ratio of 0.0618. All right, very close to at the 1.0835. Okay, this level is being removed. Okay, let me type it again. 1.0835. All right, so only an hourly close below 1.0730 will invalidate this short-term minor bounce bullish bias scenario to expose the next support level at 1.0685 and potentially the medium-term pivotal support at 1.0650. Why this is a medium-term pivotal support? If I were to look at the daily chart, it could tell you a very clear picture. So this 1.0650 is right now, in fact, the potential medium-term ascending trend line that I drew from the low of 3rd of October 2023. So overall, right, this euro dollar could be involving in a major symmetrical triangle range configuration since the high of 19th of July 2023. All right, and the lower boundary of this symmetrical triangle range configuration is now at 1.0650. So that gives rise to my 1.0650 as my key medium term pivotal support level on the euro dollar. Okay, so now let us go to the sterling dollar, but before that, let me expand my screen first so that you guys could see. Okay, so on the sterling dollar, no change. The bounce actually took shape right at the 1.267 figure level. That was our pivotal support level, and managed to now still hold above the 20-day moving average as we are speaking right now during the Asia session. So no change, still maintain that short-term intraday minor bounce bullish bias to retrace last Friday sell-off. Okay, first resistance to watch out for will be at 1.2760. Above it exposes the minor range top in place since 4th of June at 1.2810 level. All right. So this one where it bounced, right? It also bounced off right exactly at the lower boundary of this minor ascending channel support that I drew from the low of 22nd of April as well. And very interestingly, another positive technical element that has taken shape on the sterling dollar was the test of the 1.27 figure level yesterday, while the RSI hit the oversold level, but it managed to shape a bullish divergence, all right, indicating to us that some form of bullish momentum in the short term basis is coming back into the picture on the sterling dollar. So with that, that few positive key elements that highlighted to you, so 1.27 figure level will be the short-term pivotal support to watch to maintain that short-term intra-day minor bounce bullish bias scenario. However, an hourly close below 1.27 figure level will invalidate this minor bounce scenario to kickstart another round of corrective decline, minor corrective decline, exposing the next near-term support at 1.2670 slash 1.2640. Below it sees 1.26 figure level. We also correspond to the rising 50-day moving average acting as a support at this similar level at 1.26 figure level as well. All right. So now going forward will be the Asia Pacific dollar pair. Let us look at the dollar yen first. All right, so the dollar yen, like I explained to you all, it still continues to trade within this neutrality range that we highlighted, 15750 15630 level, and this 15750 right now is also the the pullback resistance of this former minor ascending trendline support that I drew from the low of 3rd of May. And what we could see over here is that despite the push up right now that is being seen during the Asia session for no reason. Why? Because it's not being supported by the intermarket dynamics from the JGB yield that I highlighted to you at the start of today's daily dose a while ago. The momentum indicator is also not playing a similar movement on this series of higher high that's been seen on the dollar yen, whereas the hourly RSI now seems to be tracing out lower low, which is a bearish divergence. All right, you can see over here. So with that, this push up over here seems to be a bit spooky to me. I mean, I'm not convinced of this push up at this point in time. So still maintaining that neutrality stance for the dollar yen between 15750 and 15630. Only above 15750, then potentially we could see it rising to 158 figure, 15830 level. Then above it potentially sees the 15950 slash 16030 range, which is the long-term pivotal support range. Only an hourly close below the 15630, that means a clear breakdown below the neutrality range, which is also the 20-day moving average that potentially expose the 50-day moving average coming to act as a next support level or support zone at 15510 slash 15480 level or 15460 level. Okay, let me do a proper one, 154.60. Okay, over here. All right, so that's for the dollar yen intraday technical outlook. Okay, now moving on, next will be the Aussie dollar. So the Aussie dollar yesterday, it managed to push up as expected, so come very close to the second resistance that we highlighted at 66.30. So in today's Asia session, it printed an intraday high so far of 66.13. Okay, give or take is almost there. So what we could see over here, very interestingly, after it came close to 66.30, it starts to trade down. And what we could see at this point in time, the RSI has started to bank off from a descending trend line. So indicating to us that after banking off from this descending trend line, it inched back lower towards, it start to inch down. So indicating to us that this upside momentum is losing strength, okay, by the RSI hitting off a descending parallel resistance level, indicating the lack of upside momentum to potentially see a positive follow through on the Aussie dollar. So with that, right, Aussie dollar will be using the 66.30 level as my short-term pivotal resistance for today, to maintain any potential push up so far at this during today's Asia session. So we will flip to a short-term intraday bearish bias. Next support level to watch will be at, on the intraday basis, will be yesterday's minor swing low area, which is the 50-day moving average, acting as support as well at 65.75. So below 65.75 exposes 65.60, which is the minor swing low of 8th of May. Below it exposes the 200-day moving average that is acting also confluencing with this next near-term support zone that I defined from 2nd of May and 2nd of May area at the 65.40/65.20 level. All right, so this will be the three key support level to watch for today's Aussie dollar intraday bearish bias view, using the 66.30 as my short-term pivotal resistance. Only an hourly close above 66.30 will invalidate this view, this short-term intraday bearish view within its sideways medium-term symmetrical triangle range configuration to expose the next near-term resistance at the minor swing high of 6th of June and 7th of June at 66.80. Above it sees another retest of the minor swing high of 16th of May and 17th of May at 67.10. All right, so if you go to the daily chart of the Aussie dollar, it's still a very boring range trading configuration. You could see over here, it's still being kept right now. Now it's trading close to the upper limit of this symmetrical triangle range configuration that is in place since 13th of October 2023 low. And the upper limit of this symmetrical triangle range configuration will be the medium-term pivotal range resistance medium-term pivotal resistance at 67.30. Why is it medium-term pivotal resistance? Because it confluences with the upper limit of this symmetrical triangle range that previously prevented the rally from bursting up higher on 28th of December. So now acting as a resistance right now at 67.30 as well, right? So pretty much boring range trading scenario if you look at from a medium-term perspective on the Aussie dollar. So there's no clear uptrend or downtrend at all from a medium-term perspective. Okay, now with that, we pretty much sum up with the short-term intraday technical outlook on the major dollar pair. So now let us shift our focus now to the major stock indices, starting from the Asia Pacific stock indices. First will be the Hong Kong 33. So the Hong Kong 33 or the Hang Seng Index has reopened for today's trading session after the closure of yesterday's public holiday in Hong Kong. So what interesting over here is that it came down, did a test today right at the 1806 short-term pivotal support level. So I give a bit of excess because it's also coming very close to the rising 50-day moving average at 17,895. And what's 17,895? 17,895 is the former minor swing high area of 29th of April and 30th of April. And if I do the Fibo retracement of that recent multi-week push up from 19th of April all the way up to 17th of May, is actually confluence with the 50% Fibo retracement as well. So a bit of excess, 18,060 slash 17,895 will be my short-term pivotal support for today, potentially still maintaining that short-term intraday bullish bias for that potential minor bounce scenario to play out. First resistance to watch, 18,380 level. Okay, let me write that down. 18,380. Okay, above 18,380 sees the next near-term resistance coming in at 18,730. Okay, which is the minor high of 5th of June and 6th of June, and also converging with the 20-day moving average that is acting as a resistance area as well. Only an hourly close below 17,895 will invalidate this potential minor bounce scenario to see the extension of this multi-week corrective decline to expose the next support area at this 17,600. Below it sees 17,170, which is also confluence with the key 200-day moving average. Okay, so that's for the Hong Kong 33. Moving on, next will be the Japan 225 or the Nikkei 225. So the Japan 225 continue to pierce up as expected, clear above the first resistance zone of 38,975 slash 39,070, which is the former minor swing high of 3rd of June and 6th of June now turns into a pullback support. So with that, right, I will have a Titan key short-term pivotal support for today at 38,830. So any potential pullback that is managed to hold above 38,830, we will still maintain that short-term intraday bullish outlook on the Japan 225, i.e. the Nikkei 225. Next near-term resistance to watch will be at 39,500, which is close to the former close to the minor swing high area of 20th of May and 15th of April. Above it exposes the next near-term resistance at 39,810, which is defined by the minor swing high of 9th of April and 10th of April, and as well as the upper limit of this potential evolving minor ascending channel that I drew from the minor swing low of 30th of May. And if we do the Fibo extension from the 30th of May rally all the way up to the rally of 3rd of June, project it down to the pullback low of 5th of June, it corresponds close to the one-time Fibo extension level as well. So this level over here is also pretty key at the 39,810 from a short-term intraday basis. Only an hourly close below 38,830 will invalidate today's short-term intraday bullish outlook to kickstart another round of messy, choppy decline movement on the Japan 225 to expose the next near-term support area again, which was yesterday's pivotal support area at 38,550. A breakdown below it further sees a risk to retest the 4th of June minus swing low and the 1st of June, 31st of May minus swing low at 38,290 level. All right, so this will be the short-term key levels to watch on the Japan 225. Now, German 30, which is the German DAX. So the German 30 was also impacted by the sudden snap parliamentary election that is called for in France. But what's interesting over here, it tested right exactly at the pivotal support before shaping that minor intraday V-shaped bounce. Okay, so it's going to be a very choppy formation again. So like I mentioned, in the short term, the German 30 seems to be evolving in this kind of sideways range configuration since it can't have a proper breakout of 18,680. Okay, at the start of this month. All right, minor range configuration. So yesterday it managed to shape a bounce right exactly at the lower limit of this minor range, which is our pivotal support zone yesterday. And what's interesting over here is that the lower low that is being formed by that drastic sell-off, intraday sell-off yesterday on that negative news flow up related from that snap French parliamentary election, the technical configuration on the German 30 seems positive to me. Why? Because lower low, but the RSI hit the oversold with a bullish divergence. So indicating to us that yesterday's push down has really lost downside momentum. So with that, for sure, this will be indeed a pivotal support level to watch for today. Again, 18,390 / 18,350. So as long as this pivotal support holds, we will still maintain that short-term intraday bullish bias view within this minor sideways range configuration that is still in place since the start of this month. Near-term resistance level to watch 18,610 followed by 18,680. Okay, these are the two key, the range top to watch. Only an hourly close below 18,350 will invalidate this short-term intraday bullish outlook to kickstart another round of minor corrective decline, exposing the next support at 18,175. Below it sees 18,050 next in the first step. Okay, so that is the key technical levels to watch out for today on the intraday basis on the German 30 index. Moving on, the major US stock indices. Let's start with the Dow Jones Industrial Average first. The US Wall Street 30, pretty much of a sideways range configuration, playing around the 50-day moving average, but still holding above the short-term pivotal support that we highlighted since last Friday, 38,550, and as well as yesterday. So still no change as long as this 38,550 holds. We'll still maintain that short-term intraday bullish outlook on the US Wall Street 30, and it seems to us that right now it could be also involving within a potential minor ascending channel by linking up the series of higher lows over here and project it up. All right, so next near-term resistance to watch, first one will be at 39,130, also corresponding with the 20-day moving average acting as a resistance. Above it potentially exposes 39,390, former minor swing low of 14th of May that triggered that previous multi-day corrective decline, and also now correspond to the upper limit of this newly involving minor ascending channel from the low of last Thursday. Only an hourly close below 38,550 will invalidate today's intraday bullish outlook to see another round of choppy decline. Next support level to watch will be the minor swing low of 4th of June at 38,280. A breakdown below this level exposes 37,890, 37,750, which is the minor swing low of 2nd of May and 25th of April and 1st of May. All right, now moving on will be the Nasdaq 100, which is the top performing outperformer yesterday, continue to inch up higher and almost wanting to print another fresh all-time high again. Okay, it tested the fresh all-time high 19,124 before it actually pulled back down during the Asia session right now. So still no change, right? Since it hasn't break up to fresh all-time high. The first support level to watch will be at 18,910. I don't want to touch it so tightly as my key pivotal support level. So the key pivotal support level still maintains at 18,720. Which is also corresponding to the rising 20-day moving average as well. So as long as 18,720 holds for today, still maintain that short-term intraday bullish outlook or bias on the US Nasdaq 100. Next resistance level to watch in the near term, 19,160 / 19,020. Above it exposes 19,400, 19,425, which is a Fibo extension cluster level. Only a breakdown below 19,720 will negate this bullish tone to kickstart another round of minor corrective decline scenario. Next support level to watch 18,460, which correspond to the minor swing low of 4th of June and the lower limit of this medium-term ascending channel that I drew from the low of 19th of April. A breakdown below it may see a steeper minor corrective decline to retest the minor swing low of 31st of May, 18,210. We also corresponding to the rising 50-day moving average, acting as coming close to this similar level, 18,230 as well. All right, so that will sum up the short-term intraday technical outlook on the major stock indices. So all of them are still holding on to their respective short-term pivotal supports level. Okay, now gold XAU / USD. All right, so let me quickly jump to the gold chart over here. Where is it? Yeah. So gold XAU / USD. Still recall that there could be a potential minor bounce heading towards the short-term pivotal resistance at 2,320. Why? Because of that oversold condition that was actually being flashed out on last Friday. So yes, that bounce plays out. So it seems to me that this bounce is now coming very close to the short-term pivotal resistance that we highlighted yesterday as well at the 2,320 level. So and if you do the Fibo retracement of last Friday steep sell off, it corresponds also close to the 38.2% Fibo retracement level. All right, so there seems to be some kind of bearish reaction already right now during the Asia session. So no change. We will be still using that 2,320 level to as a short-term pivotal resistance for today, to maintain that short-term intraday bearish bias on the gold XAU/USD. Next resistance zone, next support zone to watch will be at 2,280/2,270, which is this minor congestion area here, minor swing low of 1st of May and 3rd of May, and as well as minor swing low of 1st of April and 4th of April. A break below 2,270 exposes 2,253 level. Okay, over here. Only an hourly close above 2,320 will invalidate this short-term intraday bearish bias to see the continuation of the minor bounce heading up towards the next near-term resistance level at 2,338, which corresponds to the 50-day moving average. Above it sees 2,354, which correspond to the 20-day acting as a moving average as well. And if you do the Fibo retracement again of the entire last Friday sell-off, 2,238 correspond to the 50% Fibo retracement, and 2,354 correspond very closely to the golden ratio of the 61.8 Fibo retracement. All right, so that's the key short-term technical levels to watch out for gold XAU/USD for today. So let's move on to WTI crude. So WTI crude, this was the very sharp rally yesterday, driven by that potential stock oil replenishing from US to build up its strategic reserve that pushed this rally yesterday to 3.71%. After breaking above the lower limit of that 76.6 Fibo, 76 key resistance level. So now what's interesting over here is that it now start to see a bearish reaction right at the upper limit of this key medium term range resistance, 7840/7660. So this level here also correspond to that former minor ascending channel, now turns into a pullback resistance as well. All right, so what we could see over here is that perhaps there could be a bit of hesitance by the bulls to push slightly higher over here, but because there's some bearish reaction right now, so there could be a chance of a intraday setback. All right, so but what's interesting over here is that I want to highlight is how it hit that key medium term range resistance upper limit. All right, based on yesterday's push up itself. All right, banking off at this area here. So if you go down to the hourly time frame, what we could see over here is that the hourly RSI has really hit the oversold level, and right now it starts to actually shape that exit up from the overbought level, not oversold, pardon me, a bit of tongue twisting. It hit the overbought level, and right now it starts to shape that exit up from the overbought level as well. So indicating to us it may start to work off this yesterday's short push up with the break of that 76 60 70 level over here. That was yesterday short-term pivotal resistance. And also from a Fibo not Fibo elliott wave count perspective, this move up over here, it moves in 5 wave. Wave 1, minor wave 1, minor wave 2, minor wave 3, minor wave 4, and minor wave 5, with the wave 5 potential terminal target or terminal level kind of being made at the 0.674 at 78.38 level. All right, so with a potential fifth wave target, minor fifth wave target has already been met, where price action now starts to react off the overbought zone on the hourly chart. And where it react off at a key upper limit medium term resistance zone as shown on the daily chart here, 7840/7660 level. This one over here, you see my mouse. All right, so with that, right, we will have a short-term intraday bearish bias for a potential setback after yesterday's swift move up. using 78.90 as my short-term pivotal resistance, which correspond to the minor swing high of 31st of May, that after it hit, it kickstart that last swift move downwards. All right. So as long as this 78.90 short-term pivotal resistance is not surpassed, we will have that short-term intraday bearish bias for that potential minor setback scenario that may unfold. First support level zone to watch out for will be that 7670/7630 level, this zone here. A breakdown below it exposes last Friday minor swing low area at 7550 level, okay, which correspond to yesterday's Monday swing low as well before that steep push up, intraday push up. Only an hourly close above 78.90 will invalidate this potential minor intraday setback scenario to continue this swift rally. Resistance zone to watch will be at 80.10, the 200-day moving average acting as a resistance, and the all-important minor swing high of 29th of May, which correspond to the psychological level of 81, and the 50-day moving average that is acting as a resistance at this similar level of 81 as well. All right, so that is the key technical levels to watch out for on the intraday basis for today for West Texas oil. So with that, that sums up today's short-term intraday technical outlook on the broad-based cross asset classes. So let's look at the economic calendar. What are the key things to look out for today? So today will be Tuesday, will be a rather quiet day, except at the start of the European session at 2 p.m. Okay, even before the start of the European session at 2 p.m. Singapore time, you will have some key job labor data out from UK, the unemployment rate, followed by the unemployment change data for April, that out at 2 p.m. Then thereafter, we do have two key Eurozone monetary policy officials speaking. ECB Botch speaking at 3:30 p.m. Singapore time, and ECB official Lane speaking at 7 p.m. Singapore time. And other than that, there will be no key US data report, and this one may drive the oil prices during today's, I think at the start of the US session, because there's no time that is being defined yet. There'll be the release of the OPEC monthly report. So this monthly report will detail OPEC's view on the oil market, both from a demand and supply dynamics. All right. So during tomorrow's Asia session, nothing much to see over here. Yeah, nothing except for at 7:50 a.m. There is this PPI data out from Japan to take note of. And also, yeah, before we go, I forgot, there's this inflation data out from China as well that's important to look out for before the start of our daily dose tomorrow at 9:30 a.m. Singapore time, and PPI. So market expecting the deflationary spiral risk in China will start to reduce. Why? Because they're expecting the PPI number, which is the factory gate data, to come in much lower in terms of the mode of contraction from last April of negative 2.5. So it's expecting to contract at a lower pace of negative 1.8% for the month of May. So something to look out for at 9:30 a.m. tomorrow Singapore time. Okay, so with that, this is Kelvin here signing off. So I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.